Major call today from Tom Lee, double upgrading FAANG stocks to overweight. He made a move in the financials too. Tom, welcome. It's good to see you. And that's where I want to begin. Your stunning call, really, double upgrade on the FAANGs. Why?
I was just thinking about this idea that the S&P can get to 4,400 by mid-year. That's a big lift. It's 200 points. And as I was going through the sectors, I realized that a huge chunk of this contribution has to come from technology. So we took a deep dive and we looked at what's really changed relative to March and even May, because we downgraded FAANG a month ago. And we realized that the market had already panicked about interest rates. So as interest rates are cooling, there's actually a pretty big flip that takes place, which is that FAANG took it in the gut the hardest on rising rates. They're a beneficiary, but then the biggest beneficiary of higher rates was financials. So we wanted to flip that. And then there's a demand thing. We think now that consumers have so much cash on their balance sheets, they don't have to financially restructure, which is financial services demand. But as infrastructure spending comes underway, that benefits tech and FAANG. So we think there's still a really good secular growth story. And now the interest rate headwind's gone.
So in the span of a month, you've essentially decided that rates have peaked.
Now, I don't forecast rates, and it is a very abrupt change for us. But when we look at things like inflation break-evens on forwards, 1 year or 10 year, it does look like the market had already freaked out about inflation that's cooling. Yesterday was good evidence. We had a really hot number, and bonds fell. Now, it could be short covering, but it does look like rates are on a downtrend. So I think rates are flat to lower, or if it's flat, that's great for FAANG.
Well, let's be clear. You can't make this call, Tom, without forecasting rates to some respect. This call is all about rates, right? If rates aren't doing what they're doing now, let's be clear. You don't make this call.
Scott, you're absolutely right. But I would say the difference I'd say is that it's really relative to market expectations. And I think investors are really positioned for higher rates. They've trimmed their tech holdings because of the idea that rates are higher. And what we have done at FundStrat, especially our team, is that we've looked at a lot of data and we think that the rate trajectory is lower than consensus. So in other words, the market will be surprised by lower rates. That's a tailwind for FAANG.